Hello, everybody. Let's have a great week. Hi, Patrick, Arif, David, everyone. How's it? Okay. Hi, everybody. Hello, Warriors. Hello, Face. How's everyone doing? So, kudos to Blake Morrow on his bullish posture and long trade in Euro from last week. Knowing Blake, he's probably taking something off the table here. Still no sound. You can hear me now? How about now, Paul? Hi, Kevin.
Hey, Dale. I can hear you just fine. So usually it's on the trader's end. So that means that they got to turn up their speakers, and obviously they can't hear you. So whenever somebody can't hear you, what I used to do is I'd put up just a little notepad note. And I would say, hey, turn up your speakers or pull the cabbage out of your ears. You should be able to hear that.
How about use a Q-tip? Yeah. So I'm going to turn it over to you in a minute, buddy. I just want to show.
No, that's fine. I'm in the middle of doing something anyway.
All right. Nice call on Euro from last week, Blake. Kudos to you, man. I know you. You're probably booking part of it up here.
Yeah, actually I sold my Euro on Friday, and then I rebought it this morning. I'm still long. I'm going to try to take some off here pretty shortly, but I've been short the dollar through other means.
Right.
So,
right. Yeah. And remember you were disappointed. You missed the gold and you were short the dollar, and a day after that, it turned out that ended up being the right thing.
Yeah.
So I was thinking about that when I saw gold this morning.
Yeah,
so great to have you and hear you every day. I mean, on FX Street, I would only hear, what you were thinking every once in a while when we did an interview. It's a real edge for me, and I'm sure everyone out there. I'm not talking morning edge. I'm talking daily edge with you around, buddy.
Oh, thanks. It's nice to be around a little bit. I know I can't be around as much as I used to be, but it's nice to be able to chime in every once in a while. So I'll let you go ahead and give your thoughts, and then.
Good morning,
gentlemen. Okay. Good morning, Steve.
I think Blake, it's a good opportunity, and Dale, to remind people of the hour change, right?
Yeah, but it's a month from now.
Oh, yeah,
it's the end of July.
Yeah, I know, but we haven't mentioned it lately, so it's good if we remind them. It's also more convenient for you, isn't it, Blake?
Oh, yeah, it's a time. Yeah. Yes, it's a time change. That's right. So we have in 30 days, we're going to be an hour earlier, everyone. Here's a couple of looks I have. I'm going to be interested to hear what Steve thinks and Blake thinks. I'm looking at the S&Ps here, playing with the 61.8 here. So are we going to make a new high? The RSI confirmed it on the 1 hour, but not on the 4, the daily. I'm thinking between here and Tuesday, the way I'd approach it is I'd have a piece on here at 61.8, maybe another piece at 78.6, and be wrong over the high. I think that we're going to have a summer of correction in the S&Ps. And then Steve gave me pause on Aussie yen last week and thought that we were going to get another push up. He was exactly correct. Here we are playing a little bit above the 61.8 level. So if the S&Ps are going to come off, I think Aussie yen might have a shot to head down. Also having a pretty negative day in US dollar yen. So that's the way I would approach these. Is you have a piece on, then you put one more piece on, and you risk the highs on both Aussie yen and S&Ps. So Steve, did this complete up here that Aussie yen, or do you think we're going to take out the high of the move, the recent high?
It's too early. It's too early to say, but I think that we will most likely have some kind of a correction, even if we are to eventually take the highs. You know what I mean? So I think there will be a shorting opportunity, and there will be one rather soon. And then we need to see how that will unfold to determine if that move lower is corrective, in which case, yes, then I will be looking for a break above the highs, or if it's going to be passive, in which case we will have a top in place, a corrective top in place.
Okay, and now I'm looking at the FTSE, and we thought we'd get a bounce off this moving average, but the bounce off this moving average is much weaker than what we had here In a matter of about 8 days, we were almost at new highs. Now about 4 days where we haven't even corrected 61.8 in the FTSE yet. And then back under 7,400, I think there's big air pockets in the FTSE. So FTSE's still leading it. Weakest rebound, much weaker than the DAX. The DAX is trying to push the highs again. Well, DAX also, all these averages, bourses look like we could have failing rallies here. So be alert to that. And if that happens, I would believe that yen crosses would be under pressure, or outright US dollar yen would be under pressure. So that's the ideas I had coming in here. Also pound, I don't know what you're thinking here, but I see 2 drives here in the pound. And to me it looks incomplete, so I wouldn't be surprised to see one more break. My preferred short over, when you choose between euro and cable, would be cable. So I have one here. It's a textbook. This diverged, but still was a pretty weak reading under 30. That's not ideal. That happens a lot on the second drive. And the third drive, we should stay above 30 if we wash out one more time towards 25.5. And that's it. So those are my ideas going into the week. You know, sometimes my ideas take a few days to evolve and manifest, and that's why I would piece into all of these. Sometimes they'll last at least into a turnaround Tuesday. So those are my calls, and the next one is yours, Steve Volke.
Very gladly, but
why don't I come in and take in for?
I think Blake needs to leave, so let him start.
Oh, so, yeah, okay, buddy.
So first of all, you know, it's summer trading. So summer trading is really it's difficult. One of the things that
I hear summer golfing is difficult in the desert too.
My God,
it's just a rumor.
It was brutal this weekend. Wow.
Did you find any shade?
Oh yeah. I mean, I stayed. You know, we park underneath the shade while we're waiting to hit, and I mean, it was the thing about Phoenix is we have and I've played golf. I've played golf in Korea, I've played golf in Hawaii, I've played golf in Mexico, and all through Canada and the US, and I'll tell you, we do have some of the best golf courses, and one of the best things about in Phoenix is it's when it's hot, these really
it's a dry heat, Blake. It's a dry heat.
All these very expensive courses.
Like a microwave.
These expensive courses, they're really inexpensive. So we play great golf, and it's good. I mean, it kicks your ass. It really does out there. And I'll tell you, it was around 10 o'clock in the morning, and I was on the last like 2 holes, and I felt like I was going to have heat stroke. I went to kneel down to look at my putt, and then I got up probably a little too fast, and I was really dizzy, like super lightheaded, like almost to a point where I was going to pass out. And I'm like, I mean, the guys that I was with, my best friends, they didn't know I was feeling that way. But man, I tell you, I got up and I almost fell right back. I almost fell down. I mean, it was so I knew I was, and then, you know, on top of that, drinking a little bit of beer, you know, early in the morning, you know, that's it's not
those breakfast beers, I call them.
They were, and that's where they get you. They really price up those things. Anyway, but summer trading is pretty challenging, and so your expectations of what you're looking for have to be less. But some of the guys that I trade with, they've been looking a lot at the bond market. And the 30-year bond continues to rally, and so as the 30-year starts to rally, and the 10 years, you know, moving higher, but the yield curve is flattening, and that's suggesting that, you know, the economic, you know, like the economy is going to eventually start to slow down. Now, it hasn't picked up in stock price because you were talking about the S&Ps. The S&Ps are just stubbornly near their highs, and you got the DAX that's, you know, near its highs too, but all in all, you know, the bond market's trying to tell us something, but the stock market hasn't reflected that, and the stock market continues to be, you know, very, very bullish. Now, the durable goods orders came in weaker than expected. I did not have a euro long going into the number. I bought it. I bought it a little while ago at 112.06, and you know I'm still long, you know, a little bit of euro, but I'm short like the dollar Swedish krona. I'm short the U.S. dollar Norwegian krona, and I've been in these since last week. So I'm playing basically dollar weakness or dollar short. I'm just doing it not through the euro. Well, I am long the euro right now, but I'm trying to hang on to those Nordic currencies more so than the euro at this point. The thing that, you know, concerns me a little bit about the euro is retail is extremely long, but you know, speculators are still long the euro dollar for the most part, but still at the same time technically it still looks bullish, and I would think that sometime over this week we're probably going to trade towards the upper end of this range, which is, you know, the 112.70, 113 level. I don't know if we're going to get there today necessarily. I'd be surprised if we made it much higher than like 112.30. But you know, the euro dollar still looks constructive for longs. The dollar continues to look weak. A lot of people have been asking about gold. Apparently there's a big sell order in gold. If you, Bloomberg reported, and also Zero Hedge, gold plunges is 1.8 million ounces traded in a New York minute is what Bloomberg has, and they're apparently fat finger. That's what Zero Hedge said as well. But gold came down to the 200-day moving average, and let me see, go over to the, and I know, and Nick had mentioned she wanted to talk about this, so I'm not going to talk too much about it, but I just want to point out that we really tagged the 200-day moving average, but we broke below this trend line briefly. Now it's popped back up again since I put out this chart, but you got to worry, or not worry, more or less, you know, pay close attention, just because we're sitting on the 200-day moving average and close to it. So gold really should bounce from here, and if it doesn't, then it's going to have some problems if we close lower than that. But like I said, I don't want to spend too much time on gold. I know Nick wanted to talk about it a little bit later this morning. Yes. Do
you remember how many short fat fingers we've had in precious metals? Do you happen to recall any buying spree fat fingers in metals?
Yeah, good point, Steve.
Yeah,
I mean, the thing about gold, and I don't know. You look at like silver too. Silver got it as well. I don't know. I mean,
first of all,
Steve is implying it's a plunge protection team. It's a fat finger on gold.
First of all, the market is generally broken, because even if we assume that this was a fat finger in gold, the reason silver moved in tandem is because, this is not a secret, we all know that there are millions of correlation algos. So for example, there was an algo that picked up a big move in gold and thought that the best thing it could do is sell silver. If we consider, you know, that there was, you know, that gold was, you know, a fat finger thing. But on the other hand, I mean, Stelios has been saying that, you know, over and over and over again. Look at some orders that go through precious metals from time to time that make absolutely no sense. Even if for some reason you wanted to sell those kind of quantities, because there can't be every single time fat fingers and always fat fingering precious metals, even if you wanted to sell those kind of quantities, it wouldn't be smart doing it all at once, because you will not get the best price out there.
Yeah. Well, no, but a fat finger is a complete, it's a mistake, you know.
Yeah, so, yeah, I know, but all of them is, I mean, so often fat fingers in precious metals and always on the same side of the market. I mean, theoretically, shouldn't we have an equal amount of fat fingers, you know, buying huge quantities of gold or silver, or selling huge quantities of gold and silver?
Okay, so what's the point you're trying to make?
Steve is basically saying that if you look at price action, it's always a move lower when it's such a big order, and it's very bad execution. You know, if I was executing that, if I was in a bank executing that in that manner, they would fire me, you know. you're trying to get best price, but this clearly is just trying to lower the price, and that's it. And that's what it looks like anyway.
So but that's anyway, what you guys, that's your assumption there.
That's the assumption, yeah, of course. I mean, we don't know for sure, but it's very odd that it always happens like that, and it usually happens in low liquidity time as well. But
yeah, I mean that happened at the European Open, I think, wasn't it?
That did happen in European Open. So today wasn't really a very low liquidity time, but other times. Anyway, it's a long discussion. This thing, it's very difficult to really know what's happening.
Well, a counter to that argument would be if you're thinking, central planners trying to make things look good. There was a fat finger in Amazon that broke the NASDAQ card a few weeks ago. So, I don't know.
Yeah. Yeah. All I know is if they were trying to move the market, it moved gold, but you think about all the people that got sucked into the dollar long, you got probably people that got sucked into, silver short, but, how do you trade it? I mean, unless you're playing against that 200-day moving average and you're just long, that's the only way I would think to play gold, or you're playing on a break of new lows. I mean, that's it. But now with the durable goods orders that came in, and those durable goods orders, by the way, are very weak. It was extremely weak reading on durable goods orders. So I would be very hard. I'd be very hard pressed to try to play.
That, Blake, is one more piece of hard data that comes out rather weak lately for the U.S. economy. I mean, if you've seen that the Citigroup's Economic Surprise Index, it has really plunged during the past few months. And obviously we're going to see that affect, the quarter's GDP for sure.
Yeah, and then estimates are probably going to come down pretty aggressively as a result to that data as well, and so that begs the question is the dollar a good value proposition at this point? Do you really want to be long dollars at this moment? I mean, I look at the dollar, and the dollar technically still looks extremely weak. And as I pointed out on this week's video, the fact that we really haven't bounced much from the 618 retracement on the dollar, and the fact that the dollar is technically broken. I mean, you look at like the weekly chart, false breakdown here. The dollar looks weak, and it looks very vulnerable. And I think, a lot of traders have been expecting the dollar to turn, and it just hasn't. And just over the last few weeks, makes sense that we've bounced here, but we're really not getting much of a bounce other than just a consolidation at this key support. So my 2 cents is if the dollar starts to really break down, and I don't know if it's going to happen this week necessarily, but if the dollar ever takes out this 96.40 level, I think that's going to be a very, very negative event for the dollar, and that's what I'm looking for, really, because I've got dollar shorts on, but I really want to press the gas, but I'm not doing it right now. I can't. It's summer. The liquidity sucks. There's not I really want to see a solid break, and then I might get a little bit more aggressive, and then in turn, then I'm trying to figure out exactly what I'm looking for after that. It's going to be, it's hard to say, but right now the dollar looks vulnerable. The euro looks like we could trade back towards trend highs, and I think we've got to just keep a really close eye on what the dollar is doing here, because it looks like it could move. Is it if the dollar goes down? One question you want to ask is gold a good value proposition here against the 200-day moving average? And maybe it is. Even though I'm not long gold, maybe it isn't a bad proposition to be long, because if stocks do start to come down and the dollar comes down, maybe gold is the place where people want to hide out. But I don't know. And those are the things that I'm looking at. Like I said, I've got some dollar shorts on, and I bought some euro this morning at 112.06. I'm not going to stick around in the euro too long. I think the euro could maybe trade up to 112.50. But I know that once we get above 113, we get towards 114, this is going to be a very challenging area for the euro dollar to really make some longer term gains.
How does cable look to you, Blake?
It's a freaking mess, man. I heard you talking about like the 2 drives doesn't look complete. I mean, I look at the pound, and if you think about like this daily chart and take this green channel that I think we're in, we happen to be right in the middle of this channel right now, and so am I super excited about the pound? No, I'm not. And I mean, I think while it stays above 126, you can be on the long side, but as you get up towards 128, 129, I don't know about being long either. And so for me, I'd rather wait for some extremes to be in the cable. I think it's more of a coin toss at this point. It's like, what's getting me super excited about being long or short the cable at this point? Again, is it going to be a soft Brexit? Is it going to be a soft Brexit, or maybe is economic data going to start to deteriorate? We do have I think Mark Carney is speaking this week. He speaks tomorrow morning, and we have the Bank of England financial stability report, and the BOE is going to be, you got Carney speaking tomorrow morning. Maybe we get some more light on how dovish he is, if he's as dovish as the market believes. Because right now the market believes he's extremely dovish, and where some BOE members are more hawkish, if he continues to, keep the dove hat on, maybe the pound does trade down a little bit. But I don't know what to do with it. The short answer is I don't think there's not much that's exciting me here about the cable.
Yeah, I'd like to see it test your blue line one more time. I might be interested down there.
Yeah, I mean that's 127. I mean, it's not very far away. We're a headline away from testing 127. I mean, and especially with Brexit negotiation talks happening right now. Yeah, it could very easily get down there. But I think that's what you got to do if you want to be long. You got to buy dips rather than just kind of trying to pick it up right here when it's mid-range. And you look at like this is the hourly RSI. We're smack dab at 50. We're kind of in the middle of a range.
Yeah. Neutral.
Yeah. So it's like why fiddle with it right here? Let it dip to an extreme level, pick it up, or if it rallies back to 128, maybe that's where you're selling when it gets back to this 618 retracement, which would be about 128, 128.30. Maybe sell it up there or buy it down here. I don't know. But right now it doesn't seem like there's any reason to participate.
Yeah, I'd prefer to see it take out that recent low yet the circle in and the RSI demonstrate strength over 30 instead of having 20 readings for a takeoff.
Yeah, yeah. I mean, in this environment, you could theoretically get that. So, like I said, we're a headline away from probably an aggressive move in the pound. I think you got to wait for that, and maybe even trade contra or counter to that headline. So let the headline push the market to extremes, whether it's high or low, and then play it. And one other thing, I think if just paying attention to the dollar yen. The dollar yen's holding up pretty well, but we start getting below 111, then that might suggest that the stock markets maybe it'll come under pressure. But like I said, we got to keep an eye on bonds, keep an eye on the 30-year. 30-year continues to be really strong here. And,
well, it retraced. It's back to election levels now.
On the bond market?
Yeah, the 10-year and the TLT got back to the election level.
Yeah. So, okay.
Not the 10. That's the 30-year?
That's a 30-year, yeah.
Okay. Yeah, not quite. That would be 130. That's where the election was, yeah.
Yeah, bonds look fairly firm, and I think we should keep an eye on those too. But look, look at the stock market. Look how resilient we are. We're pushing into new highs on the S&P. overnight, which is just crazy to me. But anyway, I'm going to pass it over to you guys. Steve, it's all yours. And guys, thanks for being around here, and happy Monday to you. Hope you have a good summer trading session.
Good luck, Blake. Talk to
Thank
you
you, Blake.
Thanks, guys.
Okay, Mr. Volgi.
Hey, Dale. Good morning to all, first of all. I'm
Hello,
good.
mate.
I'm good.
Good.
Yeah, the weather is rather a little bit too hot for my taste, but, you know.
Oh, yeah, what's the temperature high of the day going to be there and where you live in Greece?
Around 36.
And do it in Fahrenheit.
You want it in Fahrenheit. Wait.
Yeah, I don't understand Celsius. I'm not. Yeah, you have a temperature translator.
97.
Oh, wow, yeah. Like here, where I am. Okay.
Yeah. But, you know, air conditioning for the win.
You know, getting back to the gold discussion, Steve, I didn't want to take up any Blake's time, but, you know, that's the whole reason what Stelios was saying and what you're implying, why Jim Sinclair, you know who he is, he's like one of the original gold bulls, gold bugs, whatever you want to call them, opened up a cash and carry exchange in Singapore. So he talks about the emancipation of gold from the paper market, that the paper market is distorting the value. When you look at all the open interest and short interest in futures and paper markets, it's more than the cash market. So his whole point is to emancipate it from manipulation in the paper market by not having a futures exchange, but a cash and carry exchange, which they have in Singapore now.
Yep. And,
so he's a big believer in the manipulation. But what isn't manipulated? You know, what isn't? Tell me, cattle, live cattle, maybe, you know, the meats, but most financial markets, the central planners have their fat finger in all of them, don't they?
We've had a big discussion with that plenty of times with Stelios. What you're implying, and it's actually very true, is that in the current market environment, price discovery has almost gotten extinct, right? And that's a huge problem. And, you know, plenty of markets, as you very well said, one way or another, directly or indirectly, are being guided, in quotes, for one reason or the other. And, you know, that is something obviously that creates a lot of issues, and that also creates an artificial environment where volatility is extremely low for a prolonged amount of time. But when things go bad, volatility becomes insane, because when all those mechanisms fail, then the market has to actually reprice things, even in the short term, to, you know, to more actual fundamentals, let's say. And having been distorted for long periods of time, those then are brutal moves that happen. And, you know, central banks and whoever else is participating in that think that they're protecting the market from those kind of moves, but whatever else they're doing. But in fact, they are the ones that are creating an environment that can produce those kind of moves and those kind of distortions. So it's a very weird game, and, you know, make sure of that. Those are not excuses for us traders to just blame losses or whatever to,
you're right.
You know, because it doesn't matter. I mean, you are in the game, still technical analysis is going to work, still fundamental analysis is going to work as long as you are patient, because fundamental analysis and fundamentals, especially under such an environment, might require a lot of time to prove you right. As, for example, we've seen in the occasion of people that were trying, you know, for whoever has read the book or even watched the movie that came out like quite recently, The Big Short, there were people that, you know, that had actually realized completely what a bubble that market was, but it took them like a few years to get vindicated for something that was so obvious in their eyes, because they had done their due diligence and research.
Oh, even after the Lehman failure, they were still losing money.
Yes.
Even while it was happening, some of the big brokers were trying to squeeze them out of their positions.
Exactly.
Yeah.
Exactly, and that says it all. So especially if your compass, if your guide is fundamentals, it's absolutely imperative under the current environment to use very low leverage, and be patient and really believe in yourself and in your analysis, because if you don't, this market can easily slowly and steadily persuade you that you've done something wrong, or you're thinking, things in the wrong way before it actually proves you right. And perhaps you're not any longer in these positions, you know what I mean? You've given up.
Yes. So what are you seeing technically here, Steve?
Okay, first of all, if you remember, we had this conversation. You asked me, I think it was on Friday, you asked me, what do I think now that silver and gold are rebounding, and I didn't participate in this movement. And if you remember, I had told you the exact same thing. One of the reasons I told you on Friday that I didn't participate is that after this rebound, I have both in silver and gold some technical zones that are very, very close. And I'm really looking forward what's going to happen when we test those. And I don't need to say what happened. You can see it in the charts, right?
Yeah, I thought the low was made last week. So kudos to you, great analysis. So
you know something,
how now, brown cow?
I wasn't sure at all, but I could have been proven wrong. But the question is the following: how exactly do you want to trade? I mean, I wasn't sure. I could have been wrong, but my feeling was telling me, that it's a 50-50 thing. I don't like to take those kind of positions because those are the positions that keep me up at night. You know what I mean?
I sure do.
And especially look at silver. I mean, look at this stupidly ridiculous move. No matter where you would have put in your stop loss, it would have been triggered, right? I mean, where would you put it? Below this low? It makes sense, doesn't it?
Yeah.
At this zone that I have here, it makes sense. Still, it penetrated through everything. I mean, it tested 1570. I mean, the move was ridiculous, and now it's almost back to where it started the day. I mean, this is this is a move of a broken market. I mean, this is plainly stupid.
Yeah, anyhow, you know what? I think that they keep doing this, and people are going to say, you know what? And I think a lot of people.
I'm not going long again.
No, I'm not going to play.
Or if I'm going to play, I'm going to play to the short side. You remember, I mean, this brings in mind the, in quotes, kind of arbitrage example that Nick has given with oil. She says that, listen, you should never be short on a Friday on oil because, first of all, there are a lot of people that are going to cover the short, so you will very likely see a rebound in oil on a Friday because people do not want to be short oil over a weekend because, no matter what kind of an event or geopolitical or whatever happens, it will almost never have a negative effect on oil. So it's either nothing's going to happen and oil is going to open more or less where it was, or something is going to happen and oil might gap higher on a Monday. So that's a reason you don't want to be short oil on a Friday, except if you are a lot in the money or whatever else. So in the same sense, somebody will tell you that if you really if you're really long, for example, gold or silver, they make you feel that if there is some kind of an event of a price movement like this, it's almost certainly going to be on the lower side. You know what I mean? And that puts an extra risk in this kind of positioning. That's a whole concept. So in essence, they're telling you that, listen, you need to have some kind of a premium to want to be long because, some stupid kind of move is always going to be against you as long as you're long.
Okay. Yeah. I mean, I just feel bad for the people that ended up being right the market, wrong the trade because, I mean, when you talk about stop hunts, this was exactly just clean out all the longs, and now they're gone. And after that, it's very hard to recommit. What are you going to do? You can buy silver now after something like that?
Yeah, and keep in mind...
That may have been enough of a cleansing event for this to end up being a major low.
Exactly, and keep in mind early European hours, are hours that Asians more or less are not going to be paying attention. Even a lot of Europeans are not going to be paying attention because, for example, I live in Europe, okay, but my sleeping habits are something between, you know, those of a European and those of an American. I mean, I wake up decently late, you know, for a European because I need to stay quite a lot late, you know, due to the work we do, because I'm monitoring mostly the US markets. I also monitor the Asian Open, etc. So, you know, a lot of people could not react to this kind of move. I mean, for example, I was awake, but I was out, you know, doing something, running some errands that I had before I actually started my day. If I saw this kind of move, I would have bought it, because these kind of moves always bring a retracement. Of course, that wouldn't mean that it would come almost to where we start the day, but you know, if you actually catch this kind of a move in the act, buying it will always bring you some kind of a short-term profit, unless you realize that there was, you know, some serious fundamental reason that it happened. But when you see that there was no reason behind it, it's almost certain that, you know, part of moves like that is going to be retraced for sure. So those are good buying opportunities for short-term trades.
Okay. So what are you thinking? So what are you thinking here with the majors?
Okay. First of all, I see a lot of questions about oil. So let's briefly visit this to reiterate my position that I've made, you know, plenty of times since we saw this move down here. Actually, even before that, I said that I have a zone that's of interest to me. This is the zone. We have a descending channel. We have this zone. Temporarily, it has provided support. Today's candle is very bearish for the time being. Currently, we have a gravestone doji. And as we're seeing, this steep descending channel still holds. As I've been writing in the analysis for a long time, since we were somewhere here, as long as we trade below 49, there's no question about if oil is bearish or bullish. You know, it is bearish. The question is, when are we going to see some kind of a rebound? Because obviously nothing can move in a straight line, right? I'll repeat that this is a good place to see some kind of a rebound. We have this wide descending channel here in red. We have this zone. We had the confluence here. So as long as this zone of its average is around 42.50 holds, there is still a chance to see some kind of a rebound higher. Now, that being said, if you want to be long there with a tight risk reward like that, okay, it makes sense. Otherwise, there is nothing bullish with oil at the moment. Nothing bullish with the price action. Even if you zoom out and see a bigger picture of what we're seeing here, and actually even if we go to the weekly, I was monitoring a channel at the weekly which has now been broken, and it's this one. You see this one?
Okay.
So yes, oil does not look good. There's no question about it. On the other hand, that being said, have a look at USD CAD.
Yeah.
It couldn't care less.
Yeah.
It's about to break below the second bear flag. The previous one worked fine,
right,
nicely.
Yeah.
And as I've been saying when we were chopping back there's nothing really bullish as long as USD CAD would hold below 134. I mean, I see a lot of people. I had a discussion with some Twitter friends, like they were telling me about Canada's fundamentals, the housing market, etc. Nobody cares. I mean, the market doesn't care in the short term about things like that. It doesn't. It simply doesn't. Don't try to trade on fundamentals, because if we go into this discussion, I'm going to then ask the following question: why is USD and US stocks pricing in a real situation for the US economy, for example? You know, it's a big discussion. Yeah. I mean, trying to find which currency prices in less of the trouble that correspond to the equivalent economy is, in my opinion, a game that will not yield any results. You know what I mean?
Do the right thing today, and tomorrow takes care of itself, buddy.
More or less something like that. That's why. Yeah. That's why, although I have a background in economics, etc., I very soon found out that the more I learn to
Yes.
ignore them in my trading, the better trading I do.
Yeah. I'm sure it wasn't an easy lesson.
No,
either.
it wasn't. It wasn't. It's like it's like trying to go against your nature. You know what I mean? It's
Right.
very strange, actually. It's very strange.
Yeah.
It's a feeling that it's not natural. I mean, you have to overcome that. But you know, I know that in that economy, X thing and Y thing and that bubble. And, yeah. Okay, fine. But the market might decide to ignore it for years. For years. I mean, just to give you an example that recently comes to mind, because I'm going to talk about these pairs. People are asking about them as well. Do you remember how many accounts, Forex accounts, were being blown when Aussie USD and Kiwi were holding and being strong above parity? Everybody was calling about every week I was receiving banknotes with every kind of analysis of and metrics of why and how much Aussie was overpriced and Kiwi were overpriced. And the same, and people were trying to sort them, and every time they were seeing, you know, a move lower, like this one, for example, here, they were like, okay, finally, it's breaking down, and then they were being chopped up, and again, and again, and again, and again. And back then, the interest rates were quite a lot higher as well in these currencies, and the carry trade was, you know, was brutal against you, especially since, you know, brokers, if you were not trading through bank markets, etc., brokers are always inflating, you know, carry.
Great point. Great example.
Yes.
Yeah.
So, you know, people were blowing up accounts, trying to be short, and then when they actually broke down, I bet you that the vast majority of those people did not have an account.
They were exhausted.
Yes.
Yeah. They were mentally and financially exhausted.
Yes, exactly. So does it matter that they were right? Absolutely no. Because the market did what it was supposed to do, but did it so much later that for those people, it played no role anymore. It didn't matter. Okay, so now let's go at Kiwi. I think that Kiwi has vindicated our view. You remember that I was saying that this is a triangle. Triangles will definitely, you know, yield a move higher.
Right.
That's why I actually took profits on that pattern in play and on my account, because, you know, something that's why you need to be nimble in the market. I mean, I'm trying not to get married to the idea of a position and the logic that led me to establish it, because then it makes you ignore things that you see with your own eyes, you know what I mean? And, you know, that triangle was too hard for me to ignore. I mean, yes, I like the short trade, etc., but as it seems, Kiwi wanted to correct, you know, a little bit in time just by chopping around and give us one more high. In my opinion, this thrust, no matter how high it takes us, which I don't think it's going to take us much higher, is going to be retraced. So I do think that a corrective move is going to come, and it's going to come rather early. So I expect that we shouldn't see a move higher than the previous peak, most likely. So I will be looking soon to be short Kiwi again. Although I'm not very sure what kind of a move we're going to see lower, there's a good chance that it's going to be a corrective move, in which case I would be looking for this zone to provide support, perhaps, as a first zone anyhow to provide support. So I'm not short Kiwi since days and days ago, as I have said here, and I'm actually looking for Kiwi to take out those longs and definitely to close higher than it had up until now. And I will be monitoring for a reversal, and then probably I'm going to be short again, and we see what kind of a structure the corrective move is going to give us, and, you know, we take it from there one day at a time. But I have to tell you something that Blake has mentioned that as well. A close above this descending trend line, not good news. Not good news for the dollar bulls as well. Not good news for those that were looking for a breakdown in Kiwi as well. So perhaps just to give you an idea, why not this being an A, a B, and a C to the whole move lower, I mean, right?
Yeah.
So this might easily be another leg higher of a big corrective move that came after a huge breakdown lower.
Yeah, I've seen that count that could take it to 78 or so.
Yeah. So for example, let's do some simple.
Yeah, you know, you just do the measure, call it like a bull flag almost, or something off the lows from September of 2016.
So let's take a fib reading and see what we have. It's hard. Let me zoom in. Okay. Okay. We have 78.15, for example, being, let's delete this way for the time being. Okay, we have, for example, 78.15 being the 61.8. The previous leg higher, the first leg higher, stalled, if you remember, at the 50%. We had indicated it back then. So now we got, a B, perhaps, and now perhaps a C. So we have a target here at 61.8. That's just above 78. So yeah, why not? Or at least a retest of this high. So, Kiwi has started looking constructive in the medium term, let's say, with this move higher. But that doesn't change what I told you. I do expect a pullback, and I do expect a pullback to come rather soon. I mean, within the next roughly 100 pips, I would be expecting one leg lower from Kiwi, which is going to be, I'm guessing, around a couple of 100 pips. So there will be a short opportunity for those monitoring Kiwi. Now, having to do with Aussie, it's still lagging a little bit because this has not yielded a new high for the time being. But same applies here. At best, you can be neutral at Aussie because it has been chopping around in this big range. It has given us two brutal moves, this one and this one, which, one completely invalidated the other, and again lower and again. And I remind you, we were monitoring at this long-term triangle, and it's one of the situations that we had a false break higher. Then we had a move lower. Then we had another move higher. I mean, this is a very tough market to trade. That's why I've completely almost abandoned it, because I traded to the short side here. I made some bucks. Actually, I refrained from buying the move higher because I had seen all those false breaks. Then when we broke below here, I made some bucks being on the short side. And then when we got the move higher, I stopped trading it because that became a very, very choppy market. And as we're doing all this movement that you see here, I'm just monitoring and staying away because there are much better trading opportunities out there. So I think that Aussie can easily then also break above these highs. It's going to find it hard to break this zone here for sure, one way or another. But for the time being, my advice about Aussie USDs, just stay away from it. There are more clean setups out there.
Okay, we're getting a few questions.
Sure.
And I think we have some time. I think yeah. Let me just scroll back. I think one was Euro Kiwi and Euro Aussie.
Euro Kiwi and Euro Aussie. Let's go. Euro Kiwi. There it is. Nothing has changed with it.
Yeah.
Here we are.
That was from Jacques.
Yeah. Here we are. We are still in this descending channel. We can even redraw it, just a few, something like that. Now if I go and bring a parallel to this, just a very slight readjustment. Here we go. So here we are with Euro Kiwi. 200 EMA below us, then the 61.8, which also coincides with several peaks and traps in the market. So I would say that I would expect a reaction at some point between here and roughly 152. But are we there yet? Clearly not. Why? Because the steep descending channel resistance is still being respected. So as long as that's the case, you know, just as randomly shooting along, yes, if you are to hold to it, probably this steep move will be retraced. Even if we move lower, still to 152, it will be retraced enough for you to find yourself back in the money. But is that the way I would want to trade? Personally, no. So I'm waiting for some kind of evidence, you know, before I can actually buy it. But I like the move. I like the move. I like the move a lot. I mean, it's very steep, it's very strong, and I believe that the snapback can also bring like 300-400 pips of upside within, you know, very limited amount of time. So I will be probably participating in this move. Euro-Aussie, on the other hand, shows a little bit different because we had this descending channel. We've had a break higher. Today, though, we have a bearish engulfing, so this move higher, which was mostly a single strong day, because afterwards we saw a spinning top, then we saw a doji, a long-legged doji. You know, doesn't look very healthy at the moment. Yes,
doesn't look ready. Doesn't look ready to me.
Yeah, it doesn't look very healthy to me. So
maybe we retrace all the way back down to your shaded area, or maybe even 142 is possible before we get the next wave up. Which
other pair did the friends want to have a look at?
That was it, but maybe you could give us an update on the pound Kiwi, pound Aussie. We had that on the radar screen from last week, and it didn't look completely ready yet. We're going to start to watch it. So,
okay, let's start by pound Kiwi. First of all, pound Kiwi. Let's go here. First of all, we've started seeing some divergence in the RSI here. It's very slight for the time being. I'm just mentioning that. Okay. Second of all, it still looks very heavy. It still looks very heavy. Although it is obvious, I think we also showed it. It is, let me remove the magnet because it's not going to help us. If it is obvious, we also saw it on the 4-hour chart, and you can see it even here. It is obvious that we have some kind of a descending wedge at the moment. Here it is. So we are still have not broken below it. So it is bearish.
Maybe another tag, one more tag.
Yeah, it remains very heavy, but I would definitely not advise anybody to be short from here, because there is a good chance that we're currently building the last stages of this move lower, so that we're currently within the very last breath of this bearish move lower. So you know, I think we will soon also have an opportunity to be long this market, but no signal yet. Now, having to do with pound Aussie, we had seen this zone, which also had the 200 DMA as a possible rebound zone. We briefly penetrated through it. Then we are again above it. Now today we're moving lower. We seem to be chopping around here. This is still a zone of interest because the 200 DMA is here. We had previous highs and lows in this zone. So I will tell you that yes, this remains bearish until proven otherwise. But
it looks a little better.
Yeah, it looks a little better, and you know, obviously the risk reward is not to be short this anymore. But still, no strong signal of saying yes. Okay, we've seen the low here, and you know, this is the time to be long. So I'm monitoring this zone. If we see a big rebound from here, you know, I'm going to start believing in it. This is a good place for pound Aussie to reverse higher, but it still hasn't given us a strong signal that it does. Listen, I know that especially summer trading needs a little bit of patience, because you know, there are times of the year that you see clean moves, and then you know, it's a trader's playground to be taking one position after the other, and you can be making money out of consecutive trades because simply you feel the vibe of the market, because it has a clear direction. And there are times that you need to be way more careful, take less positions, commit less capital in those positions, and this is the time.
Trade lighter.
Yeah. And
Any view on yen and yen crosses before Nick gets here?
Oh yeah, sure. Let's do
Because I think Nick is going to join us here.
Yes,
so
yes.
stick around,
And
guys.
Nick is going to talk about gold. He's going to talk about cryptocurrencies, and as always, Nick is always doing analysis.
I love everything she talks about, and so does everyone else.
Nick,
she's got that hypnotic voice.
And Nick is doing analysis on a huge amount of tickers, so she can easily answer any of your questions and show you any ticker you want from a harmonics perspective. And she's extremely good at what she does. I can tell you that. I mean, as a fact. Okay, Dale.
I second her nomination.
Yeah, Dale. Nothing has changed here, which is what personally. I was seeing this wedge, I'm seeing this channel, we've broken above those two, and this move lower.
It almost looks like a repeat of what happened in May. You break above the channel, no follow through. We just broke back above it again, so far not much follow through.
Yeah, but question, does this move look bearish to you?
Not yet.
Because it looks like a pen, it looks like a flag to me. And to be honest,
you would have to close back inside that channel for me to want to get.
Yeah, for me, the line in the sand, as I had said plenty of times, is this 1 to 12 zone. But for some reason, after seeing the rejection of the bottom of the channel here and the penetration of this wedge, I'm not committed yet, but my gut feeling tells me that USD yen is going to move higher, and I see nothing that tells me otherwise. So my gut feeling tells me that this is a long.
Which is kind of strange with kind of a bearish dollar view, but anyway.
You're right.
Kind of strange, but.
But sometimes I don't try to interpret it when I feel it so strongly. You know what I mean? Also, Euro yen. Does this thing look bearish to you? It doesn't to me.
The only bearish case I could make is maybe we get this is a B and we still get a C.
Still, I mean, everything looks bullish to me here. Everything.
Yeah, but it doesn't look. You're right. It doesn't look
five moves higher. I mean, let's take it one step at a time.
I mean, the retrace was so shallow.
Yeah.
Compared to the guppy.
Correct.
And,
huge bearish channel. Huge.
Yeah.
Impulsive move higher. A retracement that doesn't penetrate below the channel. Impulsive move higher. Corrective move lower. Breaking above a pennant. Nothing is bearish here. Until proven otherwise, nothing is bearish here. Let's see. Oh, sorry, I opened it at the wrong place. Let's see this as well.
Yeah.
Tell me, what is bearish here? The fact that we broke and held the retracement of the descending channel here, the fact that we held the ascending trend line here to the pip before rebounding. Obviously there are a lot of fundamental reasons, etc., etc., etc. But for the time being, and as long as these levels hold, 200 EMA here as well. So, for example, as long as we are roughly above 139, I would definitely not want to be short the pound yen. Definitely. Above 139, I wouldn't be sleeping at night if I was short the pound yen, honestly.
Thanks for your review, Steve.
Yeah, my pleasure.
Some great ideas. Basically, you know what I get from your review? Tread lightly. Also, a lot of things, have already played out, but haven't given confirmation to reverse and go the other way. So really, the watchword is patience still.
Yes, and I would
nothing really that compelling. Nothing that compelling.
Yes, and
as far as initiating positions here.
Correct. Right. And I will repeat what I said before, but with a little bit of different words. Trading is not like renting an apartment. I mean, from trading, you're not supposed to have a steady income every month. And if you try to accomplish that by taking more positions, you know, you're going to have serious trouble. When
That's really a pearl.
When you have,
that's really a pearl.
When you have trending markets and markets that are easily readable, you might end up making, you know, you will feel comfortable enough when you're experienced to step on the pedal and make, you know, 3 times more than you would, than what you've, let's say, thought that you would want on average to make from that, you know, trading account, etc. But there are months that you should be very careful, and even if you close flat or, you know, slightly positive, you know, it's a benefit, because when the waters are, you know, muddled, I mean, that's not the time to just try to achieve a specific, you know, monetary goal. You know, it's probably going to work against you. Just be patient, and, you know, the markets move in cycles. They spend times that are very clear and clean to read, and they give you great setups one after the other. And there are times, you know, that you just need to sit on your hands. And, you know, this is one of the times. That doesn't mean that you stop trading or monitoring, because it keeps you on the edge and keeps giving you the feeling of how the markets move. You just need to take on way less trades. And, you know, these weeks have been like that. That's what it is.
S&Ps. So what do you think about my call on Aussie yen? Before Nick, I think Nick's here, but
nice.
Just want your view of the Aussie yen. S&P's failed to make a new high so far. Retrace almost 88.6, so it's at 78.6 here, and Aussie yen didn't quite get to 78.6 here. So
yeah, and Aussie yen,
I think tomorrow's a key. Well, hi everyone, we're sorry about that. Some type of go-to-meeting accident.
Yeah, okay, it happens.
Yeah.
Okay, great. So is Nick ready?
See what happens. See if she's here.
Yes, she's not here yet here. Anyhow, let me take the screen. Since we were talking,
looks like we have most of the attendees back. So
yes, yes.
Yeah, so we're waiting for Nick. Okay, go ahead, Steve.
Okay, Nick is saying that she's logging in.
Okay.
So I was saying to continue from where you were left. I was saying that Aussie yen still has this channel that it's respecting. You see, and even if we break above that, we have this level around 85, 60, 85, 70, 80. Yeah, that has produced those, you know, those lows here, this high here. So,
right.
You know, I would expect a reaction for the pair, either from the channel top here or from a little bit higher there. Okay.
Okay.
Nick is in the house, by the way. Nick.
Okay.
I'm giving you the presenter. Welcome. Okay.
Hi, Nick.
Okay, here she is. We can see her screen. Nick, can you speak? Because we haven't heard you yet. Nick, we can see your screen, but we cannot hear you.
Did you make her presenter?
Yes, yes, I did. And her microphone seems to be unmuted.
Hi, can you hear me now?
Yes, yes, we can hear you.
Yes,
I had the wrong, sorry, I have got a new microphone and I hadn't selected it on the, sound panel.
No worries, Nick, welcome.
What? How are you, Nick? How you feeling?
Yeah, I could do with some more sleep, but otherwise I'm all good. Good
partner.
Yeah.
So what's on the radar here? I know you've been negative the metals, and you've been busy with crypto. So wherever you want to go, we're with you.
No, well, I'm going to go through all the crypto, but I'm going to start with gold, and I'll take my moving averages off except for 200.
It wasn't your, I know you don't have fat fingers, so it wasn't your fat finger that took gold down today, was it?
No, it wasn't. But look, isn't it like this is no coincidence where we found support, is there?
Yeah,
right there on the 200-day moving average.
It's amazing.
And I tell you what, firstly, it's very common for third touches of trend lines to be false breaks. Very common. And so that this is the third touch of this trend line from the December lows.
Yes.
And it's the 200-day moving average. And there's one thing about Monday morning moves, especially early morning moves, and especially ones that start in Asia, although this one didn't. How often are they false breaks, you know? How often do they get everybody going the wrong way to start the week and then turn? So for me, at this point, I wouldn't sell gold unless we had a proper break of this trend line and broke below the 200-day and then came back up and retested it, and I sold it against it. Because the 200-day is the boss. Look at how the market has reacted to it every other time. You know, it's the boss. And you know, you cannot just sell into it. So that's kind of where we are with gold. Yeah, we'll see.
I thought Springsteen was the boss.
No,
Bruce Springsteen.
Moving average. But look at silver. Like, if you do, where did the move come from? I think the move came from silver myself, because look at the spike we saw in silver. I'm wondering if just too many people, you know, saw the bullish setup, because it was a bullish setup. It's a classic, you know, ABC. It's a classic, you know, field support trend line. Like it was just one of those setups that's too obvious. Everybody gets long. So we have especially on silver, you know, who had this really nice inverted head and shoulders pattern. And it's so funny. I was going to do a pip on silver, you know, pattern in play on silver on Friday, and I never quite got the right entry. It kind of went without me, and I don't like people chasing the market, so I never did it as a pip. And I thought, oh, if we get a pullback Monday, I'm going to do it, you know. And look at this evil drop to 1570. So yeah, I think that was just stop running, and I think that there's quite a good chance we could go higher now, but we'll see.
Yeah, after every long.
Yeah, I am a gold bear, and yet here I am.
Long out. Yeah.
Exactly. Every long out. Silver.
Yeah. So all the longs are gone, and it's hard for a long to recommit after feeling like they were screwed. And now what they were looking for will happen most likely without them.
By those lows, like you would have had to be so quick. So yeah, that's kind of what I think about.
I mean, how long for that whole decline to happen? What was it? 30 seconds? 2 minutes? Who knows?
Okay, it's less than 5 minutes. Let's get in my 1 minute. Where is it? I can't find it now.
Yeah, it doesn't even show up on the 1 minute. It was so invisible. Oh, there it is.
Oh,
it was 2 minutes.
1 minute. It's one. No, it's one candle. One candle.
Oh.
It happened in 1 minute.
Wow.
That entire drop. So silver is the move.
I hate that. Yeah, I don't mind stop hunts.
And there's absolutely nothing. And look at what it's done since. It's just, you know, flatlined and then moved higher. Just so frustrating. So, because then everybody say, oh, let's see what happens when it retests the lows, because it's never going to come back and let you in again. So there you go. Yeah, pretty ugly. But yeah, I blame silver for that move.
Okay.
Silver's such expensive contracts as well, isn't it? So.
You mean like margin, like 5,000?
Yeah, like silver's quite cheap. Yeah, there's no mini silver, so
there used to be. They got rid of it, huh? They don't have 1,000 ounce anymore. They used to.
I don't think so. Yeah.
Yeah. Okay.
So that was that's the metals. Yeah. Now you know, kind of looking very bear flaggy in oil for a retest of the lows, isn't it?
Yeah. We've been spot on crude.
Sharp
What do
down
you think,
moves,
Nick?
choppy overlapping up moves. It's going to retest the lows. For me, I've got two support levels, 41.40 and 40 even. And I think that's probably where we're going to go. We're not quite done. But, you know, let's see, you know, let's the price action talk to us. A double bottom or something, or good signs of support on a retest would make me reconsider, because there is a 1272 support here. It's all just a bit mixed in the, this is the August futures. It's kind of easier to read the price in the continuous contract. I'm going to go up one.
Yeah.
So the ABCD, if we make a bullish ABCD move and equal measured move in oil, that's going to take us down to around 40.50, 40.40 in the continuous front month price. So that's from this high here. So that's A, B, C, and then C here. So that's what I'm looking at. And that lines up, you know, 40.60 is the 50% retracement from the lows in the continuous front month. That's if we have the lows down here in 26. So
great look.
I think that's probably where we're going to go, 40. 50% retracement in an ABC, equal ABC, like that's, and not only that, once we get to 40, people are going to be going, oh, the world is ending. And sorry, I've got Heiken-Ashi candles on, so.
You have anything under 40, like on the weekly? Before we bottomed, there was kind of a right shoulder at about 35, 38 before we went to 25 and made the final low.
No, I don't at the moment.
Like on the left side of it. Okay. All right.
But I see what you're looking at.
Yeah, you see that back there in, looks like July of 2015 or so in there, yeah.
So yeah, this lows here is around 38. So
yeah,
and this
so it
low
cleans out
high.
the panics of 40. Panics of 40 bulls.
Below, and that would be a 61.8 retracement. You know, in sort of anywhere in between the 38.2 and the 50 would be a standard. Anywhere in this zone now is going to be where we'd be looking for a bottom. If everybody tries and buys this 50% in ABCD, I guarantee you it'll go lower to the 61.8, which is at 37.18, and it'll sort of, you know, maybe there's a bit of a pivot level there. I definitely agree. I'm going to mark it here and show you in case people can't see it.
All right,
around there.
That's kind of what I'm thinking. That's kind of like a monthly pivot or so, right in there.
Yeah, it is, yeah.
And then you have some confluence with the 61.8 and everything. So great look, Nick.
Okay, so is everyone ready?
What's going on? Yeah, Ethereum, delirium, Ethereum.
Ether, it turned into ether. I shouldn't say that. Gosh, that's really bad. Okay, so in Ethereum, we have a really, I'm moving that. I need to lock that. I'm moving that. So in Ethereum, we have a bit of an important, for me anyway, a bit of an important, there's a look at. So we've got an important confluence of support down here. Okay, we're at the 38.2 retracement of the all-time lows to highs in Ethereum. We're at 50% of the last swing higher, which is from the May 27th low, and we're at an ABCD. So I'm going to take off my moving averages because I'm on the 4 hour and we're not playing them here. So for me, it's quite interesting what happens here, because I think if we don't hold it, we're going to come a lot lower. We're going to at least test these lows at 202, and that's the 50% retracement of all-time highs to low. But I think, and Gregor's not here, but I think if Gregor was here, he would say that there's an alternate count here, Elliott wave count in Ethereum, whereby this was wave 1, this was wave 1, 2, 3, 4, and this is an extended wave 5. And if it's an extended wave 5, then it's going to retrace all the way So that's going to be a long way from here.
Yeah.
So I would think probably around 886.
With all the mania and all the headlines it was getting, it actually wouldn't surprise me if that was it.
Right.
You know?
The problem with Ethereum at the moment is that everybody's really into all the new coins. Everybody wants to buy the new Ethereum because the technology is so close to where it needs to be to really change the world, but it's not quite there. And so everybody wants to be on the hot new Ethereum, okay? And so, but all of these new coins that are issued, they're called ICOs, they're initial coin offerings. And the only way you can buy these initial coin offerings is with Bitcoin or with Ethereum. So people are having to buy Ethereum or Bitcoins to buy the initial coins. And then as soon as these firms who've made the coins get paid in their Ethereum or Bitcoin, they sell them all because they need cold hard dollars to pay the people who've been developing it up until then, and they want their money. So, although I'm sure they've got some invested, but so this is why I think that we're seeing these really crazy swings in these, you know, really Ethereum and Bitcoin are almost base currencies now for all these new ICOs. So initial coin offerings. And so that's what's happening. Yeah.
Well, thanks.
So I think that's why. So potentially there's some good support here in Ethereum, and I'm going to have a quick look at.
Do people use stop losses when they're trading this stuff?
Yeah, of course.
Okay. Any idea on how they're,
and some of these exchanges, you know, you can short them as well.
Oh.
And some of these exchanges, one of the reason that, you know, everybody's, I don't know for everybody, but people heard about Coinbase, the exchange that had that really nasty drop in Ethereum. That was caused by margin selling. So what they had at Coinbase, which is a huge American exchange, very well thought of, what they had there was they had one of the initial investors who sold like a 30 million stake, I think it was worth, in Ethereum. And that dropped the price of Ethereum on the exchange 30%. And it's quite interesting because it dropped Ethereum down to a price which was, well, it dropped it down to sort of 260, 270, which was our ABC, 50%. Great place to buy. But the problem was at Coinbase.
I remember.
Yeah, the problem was at Coinbase, a lot of people had been trading it on margin, and they had, you know, positions that were well in profit, and they have an agreement, much like when you trade CFDs in the UK. They had an agreement when you trade on margin that, you know, if your account goes to zero, they'll close your position unless you deposit more margin. And there was literally no time for anybody to be contacted and ask for more margin because it happened instantaneously. So their system automatically closed the positions of everybody trading Ethereum on margin, everybody with the company, because it went all the way down to, you know, 10 cents or whatever. And so that the margin selling is what kept triggering it lower and lower and lower and lower and lower. But, you know, Coinbase are a broker who are a market maker. They take the other sides of their clients' positions. They looked at what happened and they said, you know, this isn't really good and it's not very good for us either. So they've decided to cancel all those trades. So everybody who had their margin position closed out as a result is getting it back. So that's quite good, really. I think it was quite important for their credibility. So
great insights, and thank you so much.
So there is one coin on the move today, and that's Ripple having a look at going higher. So Ripple's quite an interesting one I like myself. Really nice.
You ever drink it? It's a very inexpensive wine too, Ripple.
Is it?
Yeah, there's actually, it's a joke.
In California, you know, such a great place for wine. There is no such thing as wine in the UK.
This is kind of Skid Row variety wine. So anyway, Ripple. All right.
In the UK,
you and James would, you wouldn't want James to bring a bottle of Ripple home. That's all I can say.
Okay. He drinks plenty.
Yeah.
Okay. So yeah, like Ripple has a good look. We failed at the 23.6, you know, it's bouncing around this 23.6. I think that we've seen this first leg higher and that we're going to see another equal leg higher that's going to take us at least back to the 50% of this decline, which is, I'm going to mark it up here in Ripple. So Ripple, to me, has a really nice look and some nice upside potential there. So that's a 4-hour chart. I'm going to get.
So what is it? 16 cents or what?
Yeah, like, you know, because Bitcoin's like 2,800 and it goes, so they started these with really low numbers, and it's priced against Bitcoin. Like, remember, like I said, Bitcoin and Ethereum are the base currencies for a lot of these new coins. They're not traded in dollars, they're traded against Bitcoin.
Okay, got it. Interesting.
Yeah.
All right.
So yeah, I think that Ripple at least should see an ABC higher from here and perhaps to 0016. That's one of the ones that are holding up better in this sell-off. So yeah.
So Bitcoin's kind of like Bitcoin and Ethereum are the blue chips, and now you have penny stocks with some.
Yeah, you know, the website that will show you the market cap of these coins as well. That's quite interesting. Yeah, definitely. Ethereum and Bitcoin are the biggest. There's lots of new ones coming up, but every single chart that I look at of these coins at the moment is in a correction, except for maybe Ripple that we just talked about. This one, ICN, which I can't even remember what it's called in real world. ICN is the ticker anyway. This one's looking quite good to me. Yeah. Yeah. This hasn't sold off as much as the others, that's all. Yeah. So that's all for today. Hope that was interesting for somebody.
Nick, thank you so much. And you talking about this and coming on, it's eye-opening for me. So if it is for me, I know it is for many. So,
these cryptocurrencies, right? A lot of people say to me, why are you getting involved? Why are you interesting? Somebody said to me, oh, you've destroyed your credibility on Twitter, which was quite a laugh because I didn't think I had any. Yeah. but they are more widely traded than the biggest US stocks. And I really do think that this blockchain technology is going to change how a lot of things are done. We're not quite there yet, but it's coming.
Yeah, it's revolutionary. And, for old timers like me, it's, hard to teach old dogs new tricks, but that's why it's great to have you on top of these things and educating us and giving us views like this. So much appreciated,
Bitcoin, last look is Bitcoin, 50% retracement of the lows, making a wedge pattern. I don't know which way it'll go, but I think it'll be a nice trade when it goes.
Thank you, Nicola Duke.
Okay,
everyone, thank you. All right, bye, Nick. Thank you, Steve.
Thanks for having me.
Oh, anytime. Come on by. We love you, Nick. And thank you, Face, for you guys coming back after we had that little go-to-meeting hiccup. And thank you, Steve Volge, and thank you, Stelios, and thank you, Blake. And, Goldman said don't buy him. Well, then you better get your bushel basket out, Ash. And I'll see you, everyone, tomorrow for Turnaround Tuesday. Good hunting. And thank you for your attention today, everyone. And if you see the link, consider being a member. You're very welcome, David. Glad to have you here. I'm a legend in my own mind, David, and yours. So there's two of us.
He's wonderful.
All right, Rick. All right, everyone. Adios. And remember, don't just count your crypto, count your blessings. And I'll see you tomorrow.
Okay, bye.
Bye, Nick. See you, Steve. All right, this time it's ending officially.
Famous last